The government has reintroduced the turnover tax in the recently signed Finance Act, which also opened the floodgates for high interest rates for Kenyan borrowers. And along with the reintroduction, the government also seeks to increase its revenue by increasing the withholding tax charge on a reinsurance premium paid to non-residents, meaning that the cost of reinsurance where premiums are paid a net of the tax is expected to increase. As a way of broadening the tax base, the government also seeks to introduce the VAT on imported services to now include supplies made to any person, meaning that all persons, whether registered or not, should consider their obligation to account for VAT on imported services. Those operating in the digital space have also not been spared with the introduction of VAT on digital market supplies, meaning that the cost of purchasing goods online will drastically increase to account for VAT, with analysts now questioning just how this form of taxation will be implemented. Other tax measures introduced include excise duty tax, which has introduced new rates for motor vehicle importation, where a passenger vehicle with over 1,500 cc went up from 20% excise duty to 25%, while a station wagon and a racing car also saw a 5% increase from 30% to 35%. This as the cost of importing an electronic car went down from 20% to 10%. The finance bill, in an effort to increase contribution by the capital market to the GDP, has also introduced tax exemption for bond investment as well as push-up intake. The government's Big Four agenda on housing has also received a tax exemption where all income from the National Housing Development Fund (NHDF) will be exempted from tax. Withdrawals from NHDF to purchase a house by contributors who are first-time house owners are also included. Interest income from all listed infrastructure bonds, notes or similar securities under green bond standards are also listed in the tax exempt. Jimmy Mbogo, K24 Business.